Good morning. Welcome to Trading Hour. I am Reema Tendulkar with Mia Pavitra Parekh and Sumaira Abdi. Good morning, girls. Good to see you all in white, pretty. For the markets, a quick check. In terms of numbers, we opened below that 17,500 mark on the Nifty. From that level, we've managed a recovery to now 17,650. We're still down 0.6% on the benchmark indices, but we're off from the worst levels of the morning. Asian markets continue to struggle. In fact, we are resilient compared to the rest of the Asian pack. Hang Seng, Nikkei, Korean markets, Taiwanese markets are all down between 1.5% to 2% this morning. It's the auto index where we're seeing big gains. The Nifty auto index is at a fresh 52-week high. Bajaj Finserv has been a big mover. It's rallied today, and this week itself, in 3 trading sessions, Bajaj Finserv has gained close to about 7.5%. And on the losing side, it's IT which continues to struggle. The Nifty IT, a representative of the tech stocks listed over here. The Nifty IT index is down 1.7%, with TCS and Infosys showing you cuts in excess of 2%. Hi.
Hi, good morning. So you were talking about the auto pack, and we were talking to Bajaj Auto this morning as well, and they're sounding so optimistic on demand. In fact, they're saying that a lot of the supply side issues as well, the chip shortage has eased. They're now not dependent on a single source, and that they do expect their market share to pick up as well. So that's a big positive that came through from Bajaj Auto. In fact, a lot of these stocks are sitting at fresh 52-week highs. So whether it's a Bajaj, Maruti, TVS, Leyland, all of them doing well in trade. On the downside, you have some of the consumption names which are seeing some cuts right now, so that will be up for you. Tata Consumers in the green, but the rest of them seeing some cuts right now. So the likes of HUL, Nestle seeing cuts, and the Adani group of stocks also in under some pressure right now in an otherwise okay-looking market. So some of those names will be up for you, the likes of Adani Transmission, Total Gas, and then of course there's a whole slew of news flow coming in on stocks like SpiceJet, Biocon. So do keep those on your radar as well. But Sumaira, considering that we've got a 160-point recovery from the lows, I think we should take this. We did have a 350-point cut on the SGX, so this looks quite good.
Yeah, we'll take it with both hands, I guess. So let's get to our top story right away. Zee Entertainment is on our radar today, and that's on the back of some news that has come in. The company has signed a licensing deal with Disney Star for the ICC Men's cricket events. Meanwhile, the Zee Entertainment stock is under some pressure amid CCI concerns around this deal over the proposed merger with Sony. My colleague Mangalam is here to fill us in on all the relevant details. Mangalam, morning.
Good morning. So 2 things that are affecting the Zee stock today. The first one is ICC and the second one is CCI. And as we speak, CCI seems to be, weighing higher on the ICC development. Let's talk about both of them one by one. ICC, on late Tuesday evening, we got the update that the company signed a licensing deal with Star as well as Disney to go ahead and air on its linear TV channels all the ICC men's tournaments between 2024 and 2027, which includes the 2027 50-over World Cup. We have the Champions Trophy and a couple of T20 World Cups as well. So that does well for Zee for a couple of reasons. One, while they haven't disclosed the financial details on this deal, analysts believe that payments for such syndicates have to be staggered, so they won't impact their bottom line as much. But importantly, what it does is it fixes a missing piece in the overall bouquet of Zee and gives them a sports mantle to show for in terms of 2024 to 2027 as far as cricket is concerned. So that should have been a positive. But what's weighing down on the stock in today's trading session is the news that came in that the CCI has asked for a couple of more clarification points with regards to the merger between Sony as well as Zee, and this is after their initial findings. So this was a Reuters report to which Zee has gone ahead and responded, saying that the article claims data from FY21, before FY21, which suggested that the combined market share of Zee and Sony was over 40%. But now the latest BARC data reveals that the combined market share is about 36% itself, and the concerns that they have are only basis initial findings, and this conversation is a continuous process. So as a result of which, they will engage with the CCI, and they don't believe, including the analysts, they don't believe this to be a big problem as far as the merger, the future merger between Zee and Sony is concerned. But until there is clarity that emerges, this continues to be a bit of an overhang on the stock.
Thank you very much, Mangalam, for laying the turf for us. To discuss this in greater detail, we're now joined by